Hi everyone, and welcome to our LongHash monthly meetup. Thank you all for coming today. Glad to see so many faces filling up in this evening. Hope you had a good fill of the pizza as well. If you haven't enough, please grab some. There are some drinks as well, so please do grab those. Today, our theme is going to be bringing blockchain to life. So I hope all of us today are passionate about blockchain and the applications and cryptocurrencies as well. Can I just get a sense of audience here today? Who is, let's say, an investor in cryptocurrency? Okay, yeah, more than half. Who has used a decentralized application or something on blockchain before? Oh wow, okay, quite a lot as well, close to 1/3. Great. So today's themes and panels will be quite relevant to you as we are, as an incubator and accelerator, we are also very keen to realize some of these actual use cases. Now let's take a look at the agenda for tonight. We are running slightly late, but we're just going to have a quick opening address, which is a kind of introduction I'm doing right now. We're going to have our first panel, which is about how far is blockchain from mass adoption. We're going to take a quick break. And when we come back, we're going to have Brady from Every Token to do a presentation. And we're going to go to our second panel, which is cryptocurrencies and how it will disrupt the payments industry. Now, before we start, I'd just like to give a very big thank you to Every Token, who has sponsored this event today. They're one of the LongHash incubates. They're actually based in Shanghai. They flew all the way down here. So can I get the Every Token team to just kind of stand up and thank you very much for being here. We'll hear more from Brady later as well. Okay, so before I start, let me just give a quick introduction about LongHash. We are a global blockchain incubator. Our headquarters is actually in Shanghai. We have 5 to 6 offices which are live right now. We are also in Tokyo, Hong Kong, Singapore, Dubai, and in Zug as well. We're planning to open many other offices. So we believe it's important to establish a stronghold in Asia, and it's important to be integrated with the local community, such as yourselves today who are here. And we have a complete infrastructure on top of an experienced team. So our team has actually built all of these products in-house. In the middle, you can see a data and media platform. If you go to longhash.com, you can see many of our data journalism articles. We have a decentralized exchange called Cybex, which is also live and running for many months now. We have Wukong, which is a wallet and custodian service, which will be very helpful for exchanges, funds, or any projects looking to keep their crypto safe. And finally, we have Evaluate, which is a project rating site. And we're very grateful to our industry partners as well. Most notable of them will be under investment and trading. So we have very close tie-ins with Fambusha Capital and Block Asset, and very thankful for them to some of them are also here today. Now, without further ado, can I invite our first panelists, Geoffrey C, CSO of Anquan Capital, Kay from MVL Tada, Ling Soon from Sentinel Chain, Jake from Rate3, and Gautam. Please give them a warm round of applause. Hi guys. Okay, so we have 3 mics, kind of have to pass around a little bit. Okay, thank you so much for joining us today. We're very happy to have assembled such a reputable panel. So I believe, can we just have a quick round of introductions? Can you please tell us a little bit about yourself? How do you get into the blockchain crypto space, and what are you working on right now?
Okay, so yeah, I'll maybe start first. Okay, so my name is Gautam. I'm actually a software developer, 5 years building stuff, advise few companies on blockchain, and basically the tech guy, not the really business guy. And then how I started is I won few hackathons, the global ones in the EOS and other hackathons, and that's my starting journey. And now what we're doing is we're trying to build a solution for identity for people who do not have access to identity in countries where there's no infrastructure. So that's the kind of thing. So like 1.1 billion unbanked population. That's the kind of thing we are doing. And I think so blockchain can help in this. So that's the reason why I have a strong interest in blockchain. And that's it.
So my name is Jake. So how it started is we have a venture-backed company that raised about $3 million last year, Series A. And then when we were scaling that company, which was related to cross-border payments, we realized that the central authorities, which is in that manner was financial institutions, were the biggest block to our scale. So we asked the question that I think most people in blockchain would ask, right? How do we go around this? And then the idea of decentralization brought us to dip down into Ripple, into Earthport, into Stellar. And then eventually we find that tokenization for enterprise, right, meaning the previous product that we were building, is similar problems in different industry, not just in the finance space. And then we decided to move on with connecting this enterprise to real-world enterprise to our blockchain solution, which I will maybe have some time to explain more on what we do. But that was how we started. We started with a question: how do we circumvent the problem that we were facing when we're trying to scale our venture-backed company?
Hey, hi, good evening, everybody. My name is Ling. Judging by the amount of hair I have on the head, you guys, I probably have worked quite long. All right, I've been in the banking industry for 20 years, more than 20 years. All right, first 17 years was with a local bank doing IT, and I spent 3 years in the consumer banking space. Right, in the last 5 years, I was actually working in the local switch company, Nets, right, where we implement the first online interbank payment systems, all right, called FAST, all right, it's also known as PayNow now, all right. So having worked in this financial industry space for 20 years, I decided to change to something that's disrupting it, all right. That's where I get involved in Sentinel Chain, and of course, there's also bringing financial inclusion to the unbanked, right. Perhaps later on we'll have more time to explain Sentinel Chain.
Hi, my name is Kay, and we run mass vehicle ledger, so-called MBO, and we launched a ride-hailing service called Tada in Singapore. And the mass vehicle ledger in general, it's a protocol that can be connected with the mobility services. And Tada is one of the example service that we wanted to present to the market. And luckily, we find a very severe pain here in Singapore and Southeast Asia because of two giants consolidation. So we wanted to mitigate all those kind of problems, and we wanted to bring a right solution for the right moment. So that's how we did it. And right now, we are getting a good traction, and soon enough we want to bring another tool for the riders here in Singapore, and which is made for a taxi only service, and you shall see more service coming from MBO and Tada. Thank you.
Hi, my name is Geoffrey. I'm from Anquan. So we are a deep tech company that spins out blockchain and cybersecurity research from the National University of Singapore. One of the products one of the things you might know us more about is Zilliqa, which is our public blockchain. So when we spun out Zilliqa, the aim there was to accomplish 3 things. One was to have a blockchain that implemented sharding to achieve high throughput, which is a big problem with blockchains in general. 2 was to ensure that we have a better consensus mechanism, one that was less more energy efficient. And the last thing was to plug a lot of the smart contract security gaps that we see in Ethereum and Solidity. So we actually launched and built our own smart contract language called Scylla. So on the back of Ethereum, there are 2 other things that we are focused on now. One is our permission blockchain offering that we've built, and we are working with a few customers to deploy. And the last part is we have built a crypto custody solution off the back of a technology called Trusted Execution Environment. I won't bore you about what it is, but it's more like a hardware enclave that sits on Intel chips that we use to do key generation, and then we're offering as part of a broader tech stack around crypto custody. In terms of how I got interested in blockchain, funny story, long story. 2011, I was introduced to it through work that I was doing for a nonprofit in North Korea, and we were exploring censorship-proof systems for private exchange between entrepreneurs in the country. So that was my first introduction to Bitcoin. Read the white paper, thought it was crazy, looked at how to implement it, couldn't figure out a good fiat to crypto gateway back then, problem today too, and kind of didn't really follow through on it, but kind of stayed involved and paying attention to the space, and decided to come back to work on it like late last year. Thank you.
Great. So very nice to see a good mix of different ranges. We have people at different stages and working with different kinds of stakeholders as well, right? Governments, businesses, actual customers, or even farmers. So let's jump right into it. Now, adoption. What kind of use case or what kind of application are you pushing for? And what is the progress that you have seen so far? Or what's adoption that you've seen so far? And how do you get here? Anyone can start.
Yeah, okay, maybe I'll start again. Okay, so the use case, before use case, as I was telling, the kind of use case we are trying to solve is a digital identity for 1.1 billion people who are unbanked. And this is a serious problem because when you're unbanked, you don't have the basic infrastructure to uplift an economy. So we're talking about Africa, we're talking about maybe Philippines. I mean, these kind of places, they don't have they don't have a real solution where you can just hop on and you can get access to all these services. Now, when we talk about this kind of solution, it seems a little bit disruptive, but then the point is we need to use something like blockchain to completely decouple the digital identity with the permission access. And I think so if you use, this is one of the reasons we actually are into blockchain, because we have to decouple these two things out, because if we don't do it, the governments, the financial institutions, neither the blockchain companies, everybody cannot really follow the compliance and the compliance as well as the policies. So that's the reason we do. Now on the progress, actually we do not go on the public chain directly. What we do is we first go to partnership and try to do this as like a small pilot study. So we will be doing this in the next few months, about 100,000 users in a small city in somewhere in Asia. I cannot disclose the name. But and then once we are successful, then what we do is we scale city by city. And then eventually we're going to also have inter-blockchain communication kind of a solution to scale it to a more public and a more decentralized kind of way. So yeah, so that's the use case and that's the progress we have.
Maybe I can go next. So I just came back from a demo for a project that we're working on as part of Project Ubin. So we are building for the Singapore Exchange alongside NASDAQ and the Central Bank, a project for security token settlement. So basically we have been going through trials around how do you create security tokens, how do you settle on the blockchain, and what does it mean overall for how we deal with securities. And I think the fascinating thing about this for me is that if you think about the structures and institutions you need in the past to build a stock exchange and to kind of run through all these processes, what the blockchain has done is that it has drastically reduced the cost of doing all of this. So I think on the back of that, we are seeing that that whole industry is undergoing a lot of disruption. One very fascinating aspect about it is that it changes a lot the roles of the players in the ecosystem. So for Singapore Exchange, there's a lot of conversations there around like, okay, if tomorrow I have this standard for creating securities, people can trade it in a way, I can port it across different exchanges. What does it mean for me now that I'm both a regulator and an operator? Now, does my role have to change in the system, and how does the regulation have to change along with that? So I think those are interesting questions to us, both in terms of the disruption it means, the new players that will come out from this market, but also kind of a big barrier to maybe why things have not moved as quickly as people hope it would.
So our case is a little bit more practical level of adaptation of the service. So how we approach to deliver the service for the general public is quite different. So when we talk about blockchain or on-chain, off-chain, the audience are here probably already know more about the blockchain or technologies, but in general, like when we deal with our drivers and riders, they don't care about blockchain. They don't really know anything about the blockchain. So whenever we talk about okay, so this is the tool that you can enjoy the service, and also in return, you can get incentive. And people ask back, what incentive? Incentive is like, well, you participate as a driver, you save your own data, you have your own ownership, but with this data, because of this contribution, you get incentive. And then what? And they ask question then, with that incentive, you can exchange to token, and then what? That token can have a value of fiat currency. through the exchange. But all in all, nobody actually understands what this is. So how we did when we interact with the drivers and riders, we go with a very simple way. Tada is the service built on top of the blockchain, and this is the service that we tried to disrupt the current business model. So how we did it, we introduced a zero commission service that we don't collect any money from the drivers. So this is the public goods as an infrastructure we provide to the general public, and then they come to the service and they interact each other and creating the community together. That's how we did it. And after that, I mean, we don't even need to explain about the blockchain to the people. They just come in and start using it and they create the value. That's how we grow ourselves. From the beginning, to be honest with you all, the match ratio was 10 to 15%. After 2 months later, right now, the match ratio is up to 55%. So it increased, but the funny thing is we didn't spend any marketing money. So we like all overall about like $5,000 marketing money that we spend, but organically it grows. So each drivers who's participating in this protocol, they introduce the service to all the riders. They became a marketer of our service. That's how we did it. So we didn't even bother to explain everything to mass, public. We just go with what they want to hear, what we can give to them, and then based on that, we built the service. That's how we did it.
Right. So based on this word of mouth, how many users and how many rides have you?
So right now, drivers, over 16,000 drivers signed up, and customers are over 80,000 customers signed up, and they're actively using it every day.
Wow. Okay. So these guys are using blockchain technology without knowing anything about it.
That's right.
Amazing.
That's right.
All right. Can we?
Yep.
All right, in Sentinel Chain right now, okay, we are actually helping the developing countries, the poor people to have financial services. Now, because of the success in WeChat Pay, Alipay, the moment we talk about bringing banking services, financial services, straight away we think about bringing e-payment wallet. All right, but what we realize in these developing countries is that actually that's not their biggest problem. All right, because to begin with, they don't have money. All right, so they are not interested in your e-wallet solution. All right, so what we do at Sentinel Chain here is that we help the farmers directly. What sort of services are we bringing to them? All right, actually we are providing them with insurance and loan services. How do we do that? All right, now today the farmers, what they have is that they have livestock. But unfortunately, they cannot use the livestock to do anything. They can't buy insurance for their livestock, and neither can they use the livestock as collaterals. Why is it so? All right, imagine I'm the farmer. I own a cow. All right, I buy insurance for this cow. Tomorrow, the other cow died. I go back to the insurance company and say, hey, I insured this cow yesterday. All right, there's no way the insurance company can validate that actually I bought the insurance for this cow because all the cows look alike. All right. Likewise, if I have 5 cows, all right, I want to go to the bank to borrow more money, all right. What I do is that I borrow another 5 cows from my neighbor. I go and tell the bank, all right, I have 10 cows. Okay, the bank give me a loan based on 10 cows as collaterals. Tomorrow, my neighbor did the same trick. Right, he borrowed 5 cows from me and go to the bank with 10 cows also. All right, so the same cows actually is being used as collateralized many times. So what does that mean to the bank? When the cow died, suddenly the bank realized, oh, shucks, so many loans is actually pledged using this cow. All right, so how do we solve this problem? All right, actually we gave the cow an identity. All right, just like a human being, we have a birth cert identity card. All right, so with our technology, we actually tag the cows with a tag. We input data inside, and this data is stored into the blockchain. All right, now similarly, all right, in the case of the loans problem, okay, the problem is because they do not know, the bank do not know, actually the cow belongs to who. All right, so as part of our process, we actually link the ownership of the cow to the identity of the cow. All right, so with these 2 pieces of information, now all the problems is solved. All right, insurance can now easily insure the cows, knowing that the cows belongs to the farmer. All right, loans can provide loans to the cow, knowing that the farmer actually owns this cow. All right, so where are we right now with this implementation? Actually, our first real use case is in Myanmar. Right, in May, we actually signed an MOU with 2 ministries in Myanmar to do a pilot. All right, so we have tagged 100 cows within a day. All right, and then the cows after tagging, all right, every cow still stay alive. They were not infected. All right, the government is actually very happy with our progress. All right, so we are at the stage of starting to tag 17 million cows within Myanmar.
Great. Can we hear a bit about the farmers? Because this is ultimately to help the farmers get the loans, right? How many farmers have been impacted by the service? Have they managed to secure the loans?
Okay, now previously the farmers, because of the risk in securing the loans, actually the farmers do not have the means to borrow huge amount of money. All right, so what they manage to borrow is actually a small amount from microfinance. All right, and if they need a larger amount of money, actually they have to go to the loan shark. All right, the more humane loan shark will charge at 60% per annum. All right, why I say more humane? Because the more unscrupulous one actually charge at 20% a day. All right, that's how the farmer lost at lands. All right, so pretty much in a nutshell, what it means is that these farmers in Myanmar, actually they have no access to loan facilities.
Right, so these 100 cows, how many farmers actually own these cows?
Oh, okay. These cows were actually owned by 3 farms. All right. These 3 farms, interestingly, upon hearing our solution, they actually volunteered to take part in the scheme. All right, because they think that it's going to help them and it's going to help their fellow farmers. All right. So the first process, the first part of it is to tag the cows, go through the whole process so that they are comfortable with it, and they become our ambassador. All right, so the other thing is that because we actually tag the cows, it's just like piercing a earring into the ears of the cows. All right, there was this concern that the cows may be infected after the tagging. All right, so we actually go through a 2 months period to show to the farmers that after tagging, every cow is still alive. And thankfully, all the 100 cows today are still alive.
Very glad to hear that. Jake, can we hear from you?
Right, so I'll be the last, right? As I mentioned, right, we have a payment company back then. And then the idea of payment itself, which, in the start of all this token start was payment tokens was the boom back then. But after a while, we realized there's 2 issues. Number one is tokens are volatile. That's why there's a concept to fix this. We call it stablecoin. And then the stablecoin either fix it through algorithm or dollar back, right? But even if you fix that issue, the last issue is adoption. So the recent crash, probably like 2-3 weeks ago, Bitcoin went back to like 50+% of the total market share. So, and I think everybody in here, right? Seriously, like none, might not have heard of any of us, but the word Bitcoin probably, okay, I know something about that. But when you go out there, does anybody actually use Bitcoin for real world transactions at the end of the day? Adoptions is super low. So payment tokens are like, the 2 problems. How do you solve it? One, volatile. Second is adoption. And then we think that, hey, besides the finance industry, right, what other industry, right, faces problems with intermediaries? Because that's the idea of decentralization. But actually, blockchain is a database, but distributed. And then why this distributed database is better? Because you can trust it, because it cannot change, it's immutable, and certain things. These are the intrinsic advantages, right? Let's just go back and face it that way. So with that idea, I belong to the Young Global Leader at the World Economic Forum. I have a lot of seniors, and these seniors they run Fortune 500 companies. So like example will be like GS Global, right, in Korea. And then the guy will come up to me and say like, hey, my 12 existing business line is worth more than the entire crypto market. Why should I, look into a token or things like that? And then that's not just one of the company. There's like a numerous Fortune 500 companies that will be like, I'm not interested in this, but hey, what's the technology about? So we moved into 2 things. One is called tokenization. That means besides 2 things you all know, right? Security tokens, utility tokens. There's actually another thing in the middle called asset tokens. So these tokens, right, essentially they become like a digital IOU. They help physical assets turn into digital form. Why turn into digital form? 3 things. Liquidity. You can have fractional ownership up to 16-digit divisible. Instead of like having one immutable things that can't be moved, turning physical into digital has a lot of advantage. And then that's where we want to help the real world enterprise get connected to the technology. And then on the second perspective is, there are so many public blockchain today, right? Zelle, IOST, NEO, EOS, Ethereum. Off my hand I can count like all this, right? But The problem is if these digital tokens get changed into get put on the blockchain, how are they going to use the intrinsic advantages of various blockchain, right? Zelenka, high, TPS, right? That's the key. Lower, more energy efficient. And then Stellar, micropayments, right? Focusing on different things. So we work on this thing called identity, but very different from the identity we mentioned. It's a shared identity registry, like how you would think ERC20 tokens is a Turing complete one. And then you deploy the token that we digitize from physical asset to be deployable across several public blockchain to tap on its intrinsic advantages. Yeah, so that's what we do. Bring real world enterprise to the blockchain and then enable them to deploy on various public blockchain to tap on its intrinsic advantages. But as I mentioned, whoa, this thing sounds good, right? Who is our first Fortune 500 companies that jump in, right? At the moment, not yet. But we have launched both our testnet, so and then we have been in talks with local banks to tackle an issue on how crypto can be moved into fiat and things like that. So once again, I'm talking about like dollar-backed stablecoin and things like that. So that was the update on what we are doing so far.
Thank you, everyone, for sharing. Yeah. So we hear some common themes around, like, say, there's some volatility. There's in some other cases you don't really want to see this kind of cryptocurrency or blockchain base. So with Envo, for example, they don't see the blockchain. With Sentinel Chain, I suppose the farmers also don't really know it's the blockchain. And with Jake, you experimented with using some crypto for payments, and that doesn't seem to work out. So what is the challenge? Is it that users actually don't know about cryptocurrency? They shouldn't use cryptocurrency, or is not aware? What do you think that this adoption of blockchain technology should come hand in hand with the education of the public about cryptocurrency? So should the public learn how to use cryptocurrency, or should it remain like an invisible solution at the back? Is this an adoption like awareness problem, or is it an infrastructure problem like what Gautam is trying to solve?
Well, imagine the situation that like 15 years ago, everybody was crazy on like a cloud. There were lots of conferences all over the world. Everybody talking about cloud, and cloud will change the world and all the market scenery, right? But actually it did, and now we don't even talk about cloud. But all services that we are using, even some blockchain, everything's on top of the cloud, right? So what we see is that blockchain will be the same. I think it's my personal opinion, but I think blockchain will be like a cloud. It's going to be at the infrastructure layer, and nobody will talk about it. A couple of years later, it's going to be just an intrinsic service. Like nobody will talk about it, but everybody taking the benefit of it. That's how I see it, and that's why we don't even spend our time and money to educate people what blockchain is, and we just let them use the service, and if they can take benefit from out of it, and I think that's good enough.
Okay. Yeah. Okay. So, what I understand is there's about 100 million people who are in the crypto space, and about half of them are speculators. They're in for the money game. They're not in for and speculators are not users. If you compare users, they are the one who's just going to use your services, and they're going to retain and come back to you. But if I'm in for a different benefit, which is the value of the token, then I cannot be committed to really use it. It's a very awesome thing if I can use the services and also do the token. I think it's fantastic, but we have not really seen something doing that. Why is that? Because I think so there are two major reasons. The very first thing is the software scalability point. There's so many nice platforms, but they're all competing to become the Amazons and the Googles infrastructure-wise, but none of them have really, they're all competing with each other. Like EOS competes with Neo competes with Ethereum and blah, blah, blah. But the real competition is EOS should compete with Google. They should compete with AWS. This is the infrastructure layer we're talking about. If you do not build this, there's not going to be any company jumping into it. Trust me, it's very difficult to convince a government or an enterprise that, hey, we have awesome technology which is disruptive. They buy this. They see this as AI, equivalent to AI. But as soon as they say, okay, what are the complications for me? Is it safe? Is it secure? Very difficult questions we cannot answer. So that's the first point. The second point is that there's also a trust issue in the same space. So for example, Bitcoins, we see Bitcoin was like the revolutionary thing, but then we hear mining pools. mining pools is one way of saying that you can really collude the network. I mean, 5 years ago, there was no way to collude, and now suddenly there is a possibility. So that's number one. So this brings trust issues. Second example is everybody says it's very secure, but then there was a hard fork on the Ethereum. So this is a real live event. So these kind of things really change and really, I mean, if I'm a really customer, I would want to trust it. And if you sell me the vision, I think so this has shaken a bit, which I think so is healthy, by the way. I mean, it should get hacked to get improved. This is, I think so, okay. But I think so it's still a very small space, and there's a huge awareness. Like my mom knows about crypto, but she doesn't understand what's blockchain. So that's the point. I mean, if she can reach there, I think so you have nailed it. But the point is, you have to convert them from speculators to users, and this will only come if the infrastructure layer is not competing with each other. They have to work together to really do, I mean, they have to compete with Googles and Amazons. They don't have to compete with each other. That's my feedback,
All right. With regards to the mass adoption, all right. Actually, a lot of users, they don't know that blockchain and what is blockchain. All right. So, for example, my nephew was playing this CryptoKitty. All right. He doesn't know what is blockchain. The only time when he understands blockchain or heard about blockchain was when the system hang, go too slow. All right. Then he was asking me, what happened? All right. So that's first time I introduced this concept of blockchain. All right, but by and large, actually, nobody cares what's the technology behind. All right. So in the same case, when we implemented Sentinel Chain, we brought about this idea in Myanmar. Right. The farmers actually they don't care. All right, because they have a pressing need, they have an issue. What they really concerned about is there's a solution. As long as there's a solution, they don't really bother what is the technology behind. All right. Same thing when we spoke to the government, all right, in Myanmar, all right. They understand blockchain. They know what blockchain can do, all right. But the important thing was that we give them a solution to a problem which they were trying to solve for the last 30 years, and they could not solve it. All right. So that was the main thing that started the whole conversation about implementing the solution. All right.
I have to say, when you said the Myanmarese government officials understand blockchain, I was just blown away. I'm like surprised. Most of the people I talk to don't. I guess I have a bit of a different perspective because I work quite a bit with the enterprise and regulators and government in terms of blockchain adoption. And I think for them, I think there's two main questions they tend to ask that's important and incumbent on us to answer for them, right? One is what's the benefits of using a blockchain versus any other system they're using on? And the second part is, does the technology work properly? So, with Project Ubin, what we've been saying is that it was I feel, very well thought out process with different phases meant to test different parts of the ecosystems and the technology from different angles, because they want to know that if they eventually convert both the technology stack as well as their business model, does all of this actually make sense? So I think that's important, and it's a process that just kind of, it's ongoing, right? It's not something that they're going to say, we're going to do blockchain today. They're testing various parts of it, and eventually at some point they get to adoption. But I think what's really interesting coming out from that experiment, building security token settlement for Singapore Exchange and the central bank, is that kind of on the separate side, you're seeing a lot of startups looking at the technology stack that's being built there and launching kind of new projects and new ideas of that technology. So there's a lot of private exchanges that are coming up in Singapore, a lot of them building off things that the MAS has pioneered. So I think that change is happening from both sides, from that disruptor startup sector, and then also kind of from the incumbents, and both of them actually borrowing from the same technology stack.
Okay, great to hear. So what I hear a common thread here as well is that make sure the value is delivered, right? If you focus on the value that's being delivered, for sure people will want to use it. And the other thing is that maybe the technology is also not that ready. So I know a couple of you guys here are working on some kind of private permission blockchains where scalability perhaps is less of an issue. For the rest, maybe Jake, Kay, or Gautam as well, in terms of public blockchain scalability, so for sure, users, they know the value, they want to use it, but is it ready today? As in, is the technology ready to be used?
I kind of use EOS as an example because I do not say it's perfect. It's not at all. I mean, just talking about real test, they have a test net. They set 10,000 TPS. It reached 3,900 something on a public chain. I don't know what those transactions are, but it works. And now I think so technology-wise, there is a real case to prove that this is existing in a public network. Of course, the other problem with EOS, I think there's the governance. There's too much community management. That's the real problem. But I think so once this will be solved, I think so the next step for them should be mass adoption. And this is what they're trying to push. I mean, these all hackathons, these big funds of $1 billion plus, where will they go? They will not go to token funds. They will really go to really companies investing, and they're very curatedly doing this. So as I think so, technology-wise, there are some other good examples too. There is a huge interest in the Ethereum community to move into Casper protocol. That's a good direction. So I feel there is the scalability issues in 2 years will be solved completely. Somebody will solve through sharding, or somebody will solve through some other mechanisms. So technology-wise, I'm not really worried. But then the other part is so that's not I'm worried about. Technology part, at least I'm not worried. Yeah.
Yeah, I have the same viewpoint, scalability, but what we think is more important is how is a single token going to, once again, right, tap into the intrinsic advantages of various blockchain, right? So each blockchain can solve numerous problems like flaws, but how can we make one, universal that can, basically, like if today's standpoint would be the tech stack, how do you actually leverage on various components. Yeah.
So when we Lightbird right here, so there was a first invention before we invented the infrastructure of electricity grid. The product should come out first, and based on that product, we need to build the infrastructure. I think we are on that stage on the blockchain right now, and that's how we approach to the our service and our protocol. That's how we developed our service in that way, because blockchain is, well, when we talk about blockchain scalability, everybody talk about the TPS, and there are many different ways that we can overcome. We can do the hybrid way, we can do the centralized server, and we can do blockchain using together. And there's many different ways that we can overcome current technical issue, and that's how we doing it right now. So, for example, there is a data, so one driving data from one driver provider service to the one customer. There is a long distance, right? And there are lots of a bigger size of data coming into our server. But the thing is that we cannot upload this big chunk of data into one block. So what we are doing is that we separate the storage, and then we summarize this whole detail, and we save this summarize into the block. So that can be directly connected to the block information and also separate storage. That's how we're using a hybrid way. So there are this kind of case could be the one that we can overcome current scalability issue and technical issue. And like I just mentioned, the grid and the Lightbird, it's like the same stage. So any cases that we can actually invite a more mass adoption, like customer usage of your product, I think that could be the good start. And based on that, we can actually build more technical, infrastructure in the future. Yeah.
Just to add on, all right, I think what was shared was quite interesting, all right, because the blockchain itself today has not really been in the most mature stage yet, all right. So it does have its own constraint, but actually we could tweak designs to overcome those constraints, all right. So for example, in Sentinel Chain itself, we don't just use a public blockchain. Right, it's actually a combination of blockchains. We have the local blockchain, we have a consortium blockchain, and a public blockchain. Then we link them together to form an entire ecosystem, and that's helped us actually overcome those scalability, slowness issue.
Yes, thank you for sharing. So we hear from some of these public perspective, and very glad to hear that there's a lot of optimism that any of these technology issues will be solved. And also in the meantime, we can create the use cases in parallel to get adoption, which will drive the infrastructure to be more mature as well. So in terms of people actually using the infrastructure and how quickly it's adopting, what is the path forward for us? Where is where is the killer app, or like that one application, or the one party, one vertical that will likely push blockchain applications forward? So I'd like to explore in terms of different instruments as well, maybe. Now we're talking about security tokens like ETFs and the futures, derivatives, and so on. That is getting closer to the financial industry. What is your take on this, and is this the path forward to bringing a mass adoption?
So right now, the biggest use of blockchain for debt, right, people, is actually decentralized exchanges, right, DEXs. And then the best, I would say the one that has the most utility for utility tokens, not sure if it's for the right reason or not, is actually platform tokens. Right, like EVTs, HT, BNB. Yeah, these are like, because at the end of the day, when we call ourselves utility tokens, how you need to utilize it, right? And exchanges, with all its mighty power these days, is able to reduce the fees when you bring money out. It's able to do voting competitions for projects to get listed to increase its liquidity. Arguably, has the most use case. And then on the blockchain side, decentralized side, we are looking at decentralized exchanges, right? Being really useful, how people actually know about this. So in that front, combine both, the real thing today is about exchanges, right? For adoption, that's already been done. So your question was about like, can ETFs be next or not? I don't know, but at the end of the day, we see exchanges being a strong use case, and maybe that will lead to like at the end of this year, whereby ETF will be approved or not. Yeah, that's something that we are watching and trying to see.
I feel like there is a use case for blockchains that I think that has reached mass adoption and is staring us in the face, right? And that is ICOs. People are using the blockchain to raise a lot of money. It is an alternative path to raising money from other approaches, and it has become a very huge industry. So I think where this sits is both a mix of a bit of regulatory arbitrage, kind of the same way like Uber starts out being like, we're not a taxi company, we are private car rental, so don't regulate us in the same way. I think that's what the ICO space is doing. So you have something that sits in intersection of the lack of regulation, as well as new technology and new ways of doing things. And I think that is very, very powerful. And I think that's one of the reasons why I think a lot of people are now looking at this security tokens market, obviously with a bit more of a lens towards how regulators will react to it. But I do think that is one of the major mass adopted use case for blockchain technology.
In my case, again, like our use case of Tada is like, I would say this could be a very good use case of blockchain. First of all, the services out there, and when we talk about the blockchain use case, if we can pick a very good example of use case, everybody talking about Steemit. Steemit is the first example that everybody talk about, and later, and is there any other use case? And people don't even talk about do we have any other use case of actually people are really engaging, right? So so Tada, how we did it, so bring people in and disrupt the current traditional business model by introducing the incentive protocol inside of this application service. And by removing all those middleman's commission, and we actually bring the value to the drivers. And also because of that, we can actually realize a little bit lower price of a ride, and that can actually bring the value for the customer as well. So this actually helped us to create the community between drivers and customer. So very typical way of doing ICO is we create a Telegram room or forum, invite all people to talk about the project and discuss. And we actually did same way for this Tada service. We brought all the drivers and riders, putting into one room, and then we make them discuss. We make them bring a suggestion. We make them bring feedback to us, and that's how we did. During the past 2 months of operation, we updated our application more than 50 times because of all those feedbacks from the drivers and riders. So this is how we try to create the mass adoption and use case with the blockchain. And by doing so, actually, we could have brought insurance company as a partner to us, and also the rental company partner to us. They came to us and to do the partnership together with us, and by doing so, we can create the use case of our utility token. So for example, rent a company. So drivers need to pay their rental fee to rent a company every month. So if they can allow our driver to can pay their rental fee with the token at the end of the month, that will be the beginning of use case of our utility token. And also insurance company, they can accept our token as an insurance premium payment. Then that's the beginning of the payment. And on our side, we can also start accept the token as a payment of their ride. That's the beginning of adoption. That's how we see it. Yeah.
Okay, one use case which is base of everything is how do I know who you are on the blockchain? So reusable KYC, I think so. KYC is a very like fintech kind of a term. It's like know your customer. And if there's some way the exchange, the ICO people can identify who their customer, who the people token holders are, and can report it back to the regulatory authorities. This is something which can work. If you cannot come up with an idea that who your investors are, it's okay. They can choose not to share. This is fine. But you have to bring trust to these people, and you have to make them committed to convert from speculators to users. For them, you have to bind in something, and in a way that they are not, their privacy is not disruptive. So that's the kind of direction. So reusable KYC is, I think, so a very major thing, which is runs between on top of the protocol and between the DApp layer. So like you can create all sort of businesses on top of the protocol, but nobody really talks at the protocol level how you can identify people. They just create accounts, but okay, I really don't know who this person is, really. And when the regulators comes in, they say, okay, can you give me, they ask the DApps, can you give us a list of people who have been doing AMLs? They are not AML compliant. Like, yeah, can you give me? And this is, no, I cannot. Then they have difficulties to understand and go through it. Because regulators, their behavior of working is very, very strategic, and they've been doing this for the last 50, 60, whatever years. They will not change until there is a big change. So I have a feeling this kind of use case is kind of neglected, and this needs a little bit push. And this will benefit everybody. This will benefit the protocol. This will benefit everybody building on the protocol. And this will also benefit the investors, because they can now be in a little bit more trustworthy. And I think so this could be one of the use cases. Yeah.
Right, just to add on, right? Just there was this mention about a killer app that will bring blockchain to the forefront, right? That's a very ideal case, right? I'm not looking for a killer app, but I'm looking more for a killer solution, right? A solution that can solve a mass problem, right? Hopefully it can solve a worse problem, right? If not at least a country level's problem, all right? So working on a project called Sentinel Chain, I do hope that Sentinel Chain can solve Myanmar's problem, right? So hopefully that will help. But really, I think to bring the blockchain to the forefront is really where a country use it in a massive manner. Right, so for example, I heard, but I'm not too sure whether this is going to happen, that Japan, for example, all right, is going to adopt cryptocurrency as their national currency. All right, so if such things do really happen, all right, then I think it will really bring blockchain to a very different level.
So Geoffrey, I wanted to bounce that right to you. Is our governments and large enterprises the way to go for adoption? Or is it kind of retail apps that you work directly with people and farmers and drivers to slowly hit critical mass?
So I think it's going to come from both sides. We work with people who are building private exchanges from the scratch. We also work with the Singapore Exchange and the central bank on their project around security token settlement. I think what we are seeing is that there is a bit of interplay, right? Obviously, the big entities move a lot more slowly. They have a lot more questions around, technology risk, disruptions, regulations, so on and so forth. But what I think has been good is that the things that the central bank and the Singapore Exchange have been doing have become platforms and ideas for what a lot of the private exchanges actually want to do. So the experiments that they are running is informing the private exchanges that are the startups in the space on things that they could be doing, or how they should be looking at it, or what kind of standards they should be considering. Which protocols have been tested by MAS and they're using, and how have they performed. So all those things are actually informing what the startups are doing. And I think the startups were kickstarted faster. But then it's an ecosystem and there is an interplay. So MES, one thing they specifically identified was that in order to have all the security token settlement, you need a digital dollar. So that was the first phase of Project Ubin. They feel they have settled it somewhat. And then they're going to say, okay, now we can move into like, we have this digital dollar, how do we use to settle all the securities and all these exchanges? So it's a phased process, and all the platforms they're building, I think would become the kind of the foundation for what this new exchange, this kind of new startups are going to do in this space down the road. So I don't see it as an either-or kind of situation.
Right, so both sides and all the sides. Now, I want to open the questions now to the floor. If there's anyone who'd like to ask? Yes.
Hey, my name is Barry Shelley. I'm fascinated by a couple of things. I come from the commercial side, and one of the most interesting things I see missing on here is an enterprise guy. Now, for me, it's about saying, and you've touched on it, it's about how it gets pulled through. If you look at provenance going from gate to plate in retail, where does it stop? It stops at retailers. Stop at retailers? Because they're not pulling it through. Why? Because they're not convinced that the technology is okay. Now, telling me that I'm going to make blockchain mainstream is like telling me that I'm going to tell everyone about Oracle and SAP that drives a retailer. Why would I do that? That's not really the point. The point is that everything's happening on the background and the utility is there for them to use it. So I'm fascinated by all this captivation by the technology itself, and whether it's a stable coin or whatever the hell it is, no one really cares, just so long as it delivers what they're doing. I'm intrigued by Tada. I love what you're doing there. I understand the pull from the stock exchange and the government, and that's fantastic. What we need is pull from commercial. We don't need push. You don't need to tell me about how to inject stuff into a cow that's been handled around for the last 20 years. So that's really my question to you guys. You know, how do you get a guy from Oracle, sorry, not Oracle, but Unilever or Fair Price or any one of those guys and tell them that blockchain is no different. It's just another database with some attributes. That's all you have to tell them. They don't give a damn otherwise.
So yeah, okay, maybe I'm the enterprise software guy, which you have been looking for. So my feedback is those people, the enterprise really doesn't care what is blockchain. What they will only care to use blockchain if it solves an additional problem, which I tell you is a security. Decentralizing database within your network or outsourcing, pulling it outside. This is one of the use cases where blockchain is making something. I'll give you an example. Rakuten does it. Rakuten bought 7 companies, which is all focused on enterprise. They do not really talk about public chain. They don't really care. They're quite big. So the same concept goes here. If I have to motivate an Oracle or a Google or these kind of cloud providers, I mean everybody to adopt, it has to be a security incentive. They cannot go into tokenization directly because for them, these are big companies. If they move, the whole world moves. So for small companies, they move and nobody cares. So for them, I think so adoption will come at a much later stage, but it's also like investment. It's like you start now and then it kind of makes sense. So the answer to your question, I think so, is how I will convince you is the security. I can decentralize your network inside your organization, not outside. I'm not talking about anything outside your control, but still have a possibility that in future, when you want to go to the mainstream public, we have the technology to make you mainstream. This is permission access in the blockchain communication. So these kind of things, I just said, this is very fundamental at this moment. I mean, I can share, I can correlate to the people in 1997. I mean, when they were talking about internet, and this is the kind of thing we are talking at the moment. So I think the transition will happen, and you will be convinced because this is how the world works. Disruption comes, you adopt, you follow, and then you move on. So that's I think that it will happen eventually. You're not convinced now. I do understand, but you will be. That's my take. Yeah.
Just to add on, because we have been talking to many enterprise. So number one thing, he mentioned, right, was about regarding the security side. There's another thing that's intrinsically solvable by blockchain, just by itself for enterprise, is actually chargeback. Yeah, so there's this thing called chargeback, which between any consumer nor merchants, they will actually enter into an intermediary state. It requires someone to say, hey, the product or the money has sent through or not. Yeah. So one company is like PayPal in that use case. So as a PayPal incubator for us, we have been looking into how do we bring this technology into their 40% fraud problem, such that no one actually has to spend any resources on resolving their chargeback or fraud issue when two parties do any transactions. So, like you mentioned earlier, they don't care what's blockchain, yes, but they care about how their problem can be solved by solutions.
Can I have my personal experience of using Ethereum. So I borrowed money from my friends, like $300 at Vietnam when we got together. And I went back to Korea, and this guy came back to Singapore. But I need to send my money, but I couldn't send my money because of banking issue back then. So what I did, okay, James, do you have an Ethereum wallet? And he said, yes. Okay, then let me send $300 worth Ethereum to you. And it happened. I spent only a couple dollars to send it. And I saved my banking transaction fee, and it happened like a couple minutes. So that helped me, the adapting of this blockchain technology. And the other example is quite good example is in China. It's happening right now. So before, China is a cash-based society. Everybody using cash. When I was in China, it's like, I try to use my credit card, nobody was accepting it. And right now, I try to use my cash, and then nobody's accepting it because they're cashless society right now. Everybody using WeChat payment and Alipay. That's the adaptation of technology. Everybody using it, everybody start believing it, and that's the wave of changing. And blockchain itself, we are believing it. I believe it. So I use it. I create the service, I made the service, and I invite people to use our service. That's how I'm doing it. And more people start believing it. And that's the way of start changing the things, and the adaptation will happen with that way. That's how we see it.
Maybe I'll just talk about these one specific vertical that we work on. So on the enterprise side, we do a fair bit of projects, both with more actually on our permission blockchain offering, and we've seen a lot of them who are trialing those products, mostly within the companies itself. But I think in the space of security tokens that I've been looking at a lot more recently, and on some of the projects I've been working on, one of the big questions that comes up is this question of how do you regulate, like all the regulatory uncertainty that comes with something that's very, very new, right? So if you think about a security in the past, like in Singapore, I would list a company on SGX, the Singapore Exchange. I would trade it on SGX. And now I have a standard where I can, in fact, de facto convert my company into a public company, by digitizing my records and then basically putting it up for trade across a bunch of different exchanges. This is something very, very new. And the regulations were not built to cope with this. So you have this strange situation where there are things that the technology allows you to do, but people are not very sure how to react to it because the regulators haven't come out and put out the regulations, and they themselves have not really thought through what all the implications of all this are. So I think there is a process of trial and error. People will push the boundaries, but then I think it's something where in this particular vertical over time, what will happen is that the regulations will adapt to what the technology allows. And then that's when you see the enterprise really jump into the space, because then they have the certainty to move into that space.
All right. Pretty much the same thing, all right? At the end of the day, there must be a real world use case, all right? Because if we just adopt blockchain for the sake of using it, it's no different from using any other technology, all right? It must solve a problem, all right? And it must bring benefits to the people. And then the commercials, the benefit, all will just come in place, all right?
All right. So sorry, I think in the interest of time, we'd like to wrap up with just a very quick note on when was the last time you used a blockchain-based application or some cryptocurrency, just very quickly.
Oh, sorry. I'm not a really crypto guy. I still believe in fiats. I like to get fiats. But yeah, I do believe in blockchain. So what I do is I'm a more skeptic guy. So if somebody says we have this awesome solution, I want to try it. I've been trying few solutions with consensus. So they have a little portfolio of enterprise applications. So there is one UPod, there's Civic Blockchain. Then on the EOS, there was Everpedia, which is a public website, which is a ripoff of Wikipedia. So this is, and then there's a day-to-day app, which I thought is centralized, but it's a scatter. It's a way I can log in into different games and stuff, and I can just play. There's a bunch of games I play on the blockchain. It gives me money when I win. So yeah, these are the use cases I've been trying. Great. And unfortunately, these are not really the pinnacle of examples I can give. But yeah, I mean, they are consumer-based application, and they have traction. Yeah.
So gaming identity. Next.
I think the mention earlier was about Steemit. So you just Google any crypto related. Usually it will be on Steemit as a content. Yeah. So it's like my medium. Yeah. We read a lot of stuff. Yeah. So I think that's something that people here might see on a daily basis, but they don't realize that actually you are using blockchain solutions.
I see. So you're a Steemit blogger.
Not yet.
All right.
Yeah, I'm not too sure by using the Bitcoin, am I considered a blockchain user? All right, but I do use Bitcoin a bit. All right, in the earlier part of the year, just now, I think I shared about CryptoKitty. All right, again, I'm not too sure whether I'm using it or I'm learning how to play the game. All right, but they are all on blockchain.
Great, CryptoKitties.
I use blockchain when I send the money, when I need to give some incentive to my nephews and nieces. I use blockchain, like Ethereum or our token as well.
Sorry, no, just when he mentioned Steemit, when Jake mentioned Steemit, I just realized I have some pretty embarrassing stuff that I posted on Steemit. And do you know that you cannot delete posts after 7 days? So keep that in mind before you post anything on Steemit. I was trying to book something on Tada and have been trying for a while. Okay. Not today, but in the past. Hopefully it's better now. I think for me though, like just in the last year, one of the more interesting uses for me was quite embarrassingly. So one of the things that I care a lot about is that I founded and run a nonprofit that trains North Korean entrepreneurs. And last year, we have a bank account in the US, and the bank decided that we didn't violate anything wrong. But then they said, we just don't want the risk of holding a nonprofit who's doing work in North Korea, holding your money, because we could potentially face a lot of fine. And this is a period where everyone thought, we're all going to war with North Korea. So they decided to shut down our bank account. They issued a check to our company, and they said, well, you can go cash it at another bank. That you can then set up an account at. And so every bank we went to in the US was just like, oh, why are you setting up a bank account now? And we were like, well, because Bank of America shut down our bank. And they were like, oh, okay, fine, goodbye. We're not going to touch your money. So I had this piece of paper that I was running around with. Eventually went to a payday lender. So this very rundown neighborhoods. You have the guy in front of you who's clearly a drug user. You have the war veteran. You basically have this queue of very interesting characters. And I was there holding this check, going up there and trying to like cash it in. And the person was just like, wow, I've never seen so much like someone come in with a check with this kind of money before. So what happened after that when we cash out all of it was that we decided, well, we're going to store assets on a blockchain. Very good timing too, but it's just one of those things where you kind of realize when you are cut out from the mainstream financial systems, where all the systems come into play. And I don't think I'm the only one, right? There's all these people who are unbanked all around the world that do not have access to financial services. So I believe that is where adoption is going to come from. It's not necessarily from people who already have a solution today. It's going to be from a lot of these people who don't have a solution today.
A little bit of add-on to that. The reason why we got into trying to build for 1.1 billion people, which I've never seen in my life. So the real use case came from an inspiration. So there's an agency by UN called UNHCR. So they did a mock experiment. They did a small experiment by bringing identity to refugees in Pakistan and Jordan. And these are like 100,000 people. And why UNHCR, like a big organization, organization will use this one because they want to save money on the remittance. And this is a real world use case. This has a documented proof. They are expanding. This took a while to get convinced, but now it's in the mainstream. You will see this thing coming up to more refugees. And for UN, this is a big problem. So I think so. This is a real use case you can also see, but it's not billions. It's still a few 100,000, but still an enterprise-focused solution. Yeah.
Thank you. Thank you. A big thank you again to all of you. And please give a warm round of applause to all our panelists. Thank you so much for talking about adoption. Thank you. All right, everyone. Welcome back. We're about to start our second section where we're going to have one address by Brady Law from Every Token, and then we're going to move on to our second panel. So without further ado, please put your hands together for Brady Law, who is the CEO and co-founder of Every Token, who's going to talk about the ecosystem, the public chain of Every Token, and the real-life use cases that he's going to bring. Please give him a warm round of applause.
Hello, everyone. Thanks for coming tonight. So I'm going to quickly go through Every Token public chain and the real use cases that we currently have. So I'm going to start from this page. Every public chain has its own mission. I guess you guys all know for Bitcoin, for Ethereum, for EOS. So every token is aiming to be the best infrastructure for token economy. And then how we look at the token economy. So basically, we have a little bit value on-chain right now, mainly cryptocurrencies, right? You guys are trading crypto coins every day, so you know it's basically like 30 million people involved and only like 200 billion USDs in total value. But look at the whole picture. The human fortune is massive, right? All the assets and equities we believe will be tokenized, so the value will be circulated from off-chain to on-chain easily, right? So we are helping people or helping business or individuals to tokenize everything. And then we design some of the core functions and features for this tokenized and also our Every Token public chain. So when we issue tokens, when we do it today, we have to write a smart contract. But I gotta ask you guys a question. How many of you can write a smart contract in this room? Can you raise a hand? Wow, more than I expected. But anyway, I guess outside the salon, normal people couldn't do it, right? So we want to design an infrastructure that people don't need to write a smart contract to issue tokens, very convenient way. And also, when we transfer tokens, we want to make it free for end users, just like we are using internet today. And third but not least, when we're trying to manage these tokens, again, when you want to manage anything on Ethereum, for example, you have to read the smart contract first. But normal people couldn't do that, right? We want to create a transparent way that people don't need to read the codes and also can manage the tokens. And to support all these core functions, we need a faster, more secure, and more standardized public chain, which is Every Token public chain. So we made a few key innovations. First of all, we invented token-based bookkeeping method, which I will explain in the next few pages, how it works and what kind of benefits it would bring to our Every Token public chain. And then second of all, we create a safe contract to replace the traditional smart contract layer. And I mean, the previous panel discussion was great. Everybody's looking for the killer application or solution on blockchain, right? So we believe that micropayment would be the upcoming killer application. So also we invented EveryPay as the commercial payment solutions for blockchain. So here is how the token-based bookkeeping method works. We actually wrote an academic paper, our core team, and we delivered to IEEE Access. Hopefully get published within a month or two, but if you guys are interested, I can send you the whole paper later. But there's nothing right or wrong about the three different bookkeeping methods. It's all about what you want to do. As I mentioned before, Bitcoin trying to be the peer-to-peer electronic cash system. So anti-double spending is #1 issue for them to solve. That's why they have UTXO. And then for Ethereum EOS, the way smart contracts interact with each other is through accounts. That's why they have the account based transaction model. For us, we're trying to be the best public chain for tokens. That's why we have the token-based transaction model. And let's take a look at how it works. So as a general public chain like EOS, so what is a transaction on its blockchain? So basically the code and logic execution of a dApp is recorded as a transaction, right? So the way they do parallel is that they separate transactions from dApp A to transactions inside dApp B. That's called the application isolation in the white paper. But inside any dApp, the transaction has to be executed in a sequential way. So sequential performance. But when you do sequential, it's like two men crashing in one small door. You have to one by one. That slows them down. So current TPS mentioned by one of the panelists is like 3,000, right? So for us, we recorded the token status change on our public chain rather than the logic execution, right? Because, for example, the non-fungible tokens, I mean, everybody knows CryptoKitty is using non-fungible token, right? Every non-fungible token has a unique ID inside computer, so we can deal with those transactions parallel in nature. So we enjoy high TPS structurally. So we launch our testnet on May 31st, and that from there we get TPS between 5,000 and 6,000, and we're going to push that to 10,000 by the end of this year. So this picture shows the different roles we have in token economy. So basically, Ethereum EOS is pretty much like a laptop, a computer. They're trying to be the world's computer. You can do everything theoretically, right? You can play a game. You can surf on the internet, right? You can do everything. But we instead, every token is trying to be the tokenized asking machine. With that mining machine, you don't do too many things, right? You keep mining, but you're much faster, more secure than a normal laptop, right? We're not trying to solve other problems at this stage. And this technical structure showing how we use safe contract to replace the traditional smart contract layer. So smart contract benefits, the greatest benefits about smart contract is that it's very flexible. But on the contrary, it's so vulnerable. There's so many vulnerabilities happened before. For example, DL attack, Paris wallet, SMT, BEC, and recently Bangkok, etc., right? Millions, tens of millions USDs were lost or stolen because of those vulnerabilities within smart contract. So we build in those core functions, remember, like issue tokens, transfer tokens, or manage tokens. We're building those core functions in the safe contract. How do we make it safe? So basically, we have been open source our codes for more than 7 months already. We invited so many external testers and the cybersecurity companies to attack us. For example, in the month of July, we spent more than 200,000 USDs on the security side. So we make sure that you can, outside the applications, they can use our core functions by API calls, very safe and standard ways to achieve those tokenized core functions. And on the database layer, we use RocksDB to further boost our TPS. So here is another picture illustrating the difference between smart contract and safe contract. So everyone in this room wants a car. How many of you want to build a car from zero? Right? That's the smart contract you do. But instead, most people have a standard needs. We just want to have a car by configuration, right? We choose by different colors, different seats, different leathers, different wheels. We get a so-called personalized cars, right? But of course, if you're going to get a Batman Mobile, you go smart contract. But think about that. Do you have a huge engineering team to do that? Do you have that kind of budget to do it? Not really, right? Probably you end up car like a blue car like this. 10 minutes later, it's crashed down, right? Free usage, very important as well. So the current problem, one of the major problem for Ethereum application, I think, is that it brings us the crypto user experience. What does it mean? You need to own crypto first, and then you can use the application. For every transaction, every move you make on Ethereum application, you have to pay gas fee as an end user. But think about this, how many people own Ethereum on this planet, 25 million, right? The vast majority, they just couldn't use it because they don't have cryptos. So that's a huge entry barrier. For us, we want to create internet user experience. It's like you are sending me a WhatsApp message, a WeChat message. It's free for end users, right? So we have two things to make it free. So we have payer mechanism, so means business side is paying the gas fee for the end users. And the second of all is, if the business side wants to subsidize their partners or either could be business or individuals, they can give you some free EVTs, which is our own coin, to use the platform. So what if you just transfer those EVTs to crypto exchange and resell for value, for money, right, easily? So we create pinned EVT that's locked in your account. You couldn't transfer out. It could only be consumed as a utility, so that you can only use the applications, right? And we pay. So here we want to show the live example, the live products we have here. CG is our chief product officer. Basically, he's the product manager of EveryPay. So I want to have him to show this real case, use case.
Okay, so this is a very common POS machine. You can buy it from any market. And because EveryPay is very easy to use, you just don't need to use any new hardwares. So I just install a new app on this POS machine. And I can use this POS machine for EveryPay. So I will show it to you.
So the first one we show with the QR code payment.
This is my EVT, a wallet of our community members. So I can choose EveryPay on the wallet, and here is a QR code, which is dynamical changed every 5 seconds. And you can see it's a QR code and is based on TOTP algorithm. We can scan this QR code for payment.
Time-based one-time password, that TOTP means.
It's finished just in seconds. And you can see it's successful very fast. And because EveryPay is based on EVT Link, EVT Link is a common technology, not only for QR code, but also for all the ways you can imagine. For example, NFC and Bluetooth and many more other ways. So we will show how NFC will work on EVT Link.
Can you change it to the browser? Yeah.
I need to quickly drop this first.
Okay, browser.
This one?
Yes.
Okay, let me bring it.
NFC payment app on my phone. Also, it's very fast and successful.
Okay, we're gonna show you guys on the EVT scan. EVT scan pretty much like the Ether scan. Can you refresh the? So you guys saw 2 transactions that's happened, right? The 2 like a 0.07 EVTs. So the reason why I'm gonna show you the EVT scan is that this is real. It's real on our mainnet. It happens within like 2 seconds, right? Everybody knows if we get down on Bitcoin, it probably takes like an hour and several minutes to several hours on Ethereum, right? But for us, just a couple of seconds. And we can achieve the Alipay, WeChat Pay user experience on our network. We can go back to our page. And it not only works for EVTs, but also works for any other token issued on every token public chain. That's crucial. Then I will introduce a live case later page. So basically TOTP, as we introduce supply offline usage. What does it mean? So basically, if end user using wallets, if you are for example, staying on airplane, you are offline, but the merchants, they have satellite internet, then still can deduct money from your wallet. If you're underground, it's also supporting your offline usage, right? So which makes very convenient. And then fully functional since September 1st, and we got the first place People Choice at the Global Payment Summit. This is a traditional payment summit. So surprisingly, we got voted as #1 as a blockchain payment solution. COTP, yeah, that shows our QR codes is changing every 5 seconds. I don't know, sure it's changing here? Okay, cool. Our public chain development schedule, yeah, we started coding since February. Since day one, it's open source, so you guys can check our codes online anytime. And we launched our testnet on May 31st, and then mainnet on July 31st. Business highlights. This page very crucial as well. So I want to mention the difference between EOS and every token. So Ethereum, EOS, they all have big dream. They want to change all the centralized application system to all the decentralized one, right? But there are two major problems they're facing. So first of all, the medium to big size internet companies, they benefit a lot from the centralized system. They're not changing to decentralized system at all. The second of all is that the high performance required applications, for example, MMO games, big exchange, they couldn't run on decentralized system currently, right? But for us, it's very easy. No matter it's app or it's a dApp, they can use our core functions by API calls. And we believe in future, apps and dApps are coexisting in future, same as fiat and cryptos. They're not killing each other. So here are some of the applications based on every token. Some of them are already running on every token public chain. So we got a high frequency one, as we can see, it's going to be a stable coin and using the offline payment solutions, we believe. And we got high value ones, which is tokenized arts, real estate, contracts, right? And we got something in between, like games, tickets, entertainment. So we just signed a strategic partnership with our Malaysian partner, Hawa Genting Group. So they are going to issue up to 500 million USD stable coin on every token public chain, and then use every pay solutions on their offline businesses, like cruises, and they have the convenience store chain in Malaysia, and also they're going to expand in Thailand, in Vietnam, and some other Southeast Asian countries. Also, here are some of our cornerstone investors in the last round. We finished in early June, led by Fenbush Capital. Yeah. Actually, although we are currently, our core team is headquartered in Shanghai, but we register, every token AG is registered in Zug, Switzerland. Yeah, we're doing private sales now, if you guys are interested, yeah. But as an institution, okay. And then once we get the FINMA ruling letter, we'll do public sale and exchange listing. So every token in summary, basically we invented token-based bookkeeping method and safe contract. We call ourselves the first token customized public chain. And then we have already achieved high TPS, high security, and high standardization. And then we have the first commercial token payment protocol called Every Pay. And commercial-wise, we have very low friction, low user migration cost. So any questions?
So is it always the every pay goes with the stable coin issued on top of every token protocol? Is it always stable coin?
Sure. That's a very, very good question. It doesn't have to be. So the problem now is that normal people, they couldn't build the fluctuation of the cryptos. That's why you need a stable coin as a link, as a bridge between normal people and the crypto world, right? When they talk about like 5% fluctuation, they're going to die. They're thinking, wow, this is unbearable. But for us, it's very common, right? So we believe. So why people are talking stable coin these days so often? Because it's a bridge. Yeah, normal people can think, all right, USD fluctuation, just a little bit to them. They can definitely understand easily. Yeah. So for them, it's just a digital version of USDs. Very easy to understand, right? It's like you are using the normal wallet still, like USD. Your iBanking system, USD is the digital cash. Same thing here. But when it combines, when the Everypay combines with the stable coin, it could become the killer application. That's our point of view. Yeah. Sure.
Hi, I'm just curious about the hardware that you guys were demoing. Is that something you developed yourself, or it's just like something that already exists, or?
That's another good question. So the customized devices manufacturing, there's one startup in the Philippines called PondiX. They do produce and sell their 100% customized devices, which we think is the wrong way, because it's hard. It's super hard if you sell new devices. Even Alipay, WeChat Pay, they're so strong in China, they never sell you new devices. Sometimes they give you for free, but they never sell. It's hard, right? For us, it's using all the existing devices, like $20. Any convenience store. As you can see, Honeywell.
Can I follow up? So if I want to, because I'm a developer, I'm interested in playing with these kind of things. Mm-hmm. If I want to build something, where would I get started with that?
Sure, maybe Shiji can talk more about it.
Okay, so because our blockchain uses APIs to replace the smart contract program, so you can just call our API or use our SDK for the app. And if you want to use Everypay, you can just use our applications on Android, iOS, or Windows. Also, you can build a new app on our SDK or API. It's very easy. Maybe just one day or 2 days, you can integrate our SDK or our Everypay to your apps. So I think it's better to just use APIs, not by a smart contract. Okay.
One addition. So for example, the stablecoin partner, the Malaysian partner, they have their own wallet. They're not using our wallet. So they're just integrating our SDK into their own wallet. It takes only like a few days. It's very easy. And also, thing I forgot to mention is that we are also launching our global virtual hackathon, and if you're a developer, definitely join it, because we have great awards. Our top award is like 20,000 USDs plus 20,000 EVTs, so please do join us.
I think on that note, thank you very much, Brady. Please give him a big hand.
Thank you.
A very in-depth explanation, and really cool to see the live use case as well with the POS system. Now, we'd like to dive dive a little bit deeper, and also to gather a panel to get more opinions on this one, as well as on cryptocurrencies. Sure. So on our next session, we're going to have a panel on how will cryptocurrencies disrupt the payment industry. And Brady, please stay on stage. I also like to welcome up here Karthik Iyer from Blockchain Monk, Anson from CoinPip and Access, as well as Arvind Singh from Hula. Thank you. Thank you all of you for joining us today. So I know Karthik, for example, just flew into Singapore today, right? So thanks very much for making it short notice as well. Before we start, can we get a quick introduction from all of you as well? Kind of what you do, how do you get into cryptocurrencies, and what are you working on today?
Sorry, now this is the mic switched on. Yeah. So, we shared the story last time. I am part of the crypto history, part of the P2P Foundation. So if you Google Satoshi Nakamoto on your phone right now, the first link that will come to you is a Wikipedia link. And Wikipedia, if you go down to the history section, will tell you the only place that Satoshi has a website is the P2P Foundation. And the P2P Foundation is where he published the white paper. Everything you see here in the crypto world started there. And then if you open another tab in your browser and search for P2P Foundation ambassadors, there are 8 ambassadors. I'm one of the 8 ambassadors. So we've been mining crypto since 2009, been trading since 2011. I showed you my first trade. First Bitcoin exchange in the world, Mt. Gox, user number 9, or something like that. So 86 cents a Bitcoin. Did the first ICO pretty much everywhere in the world. First ICO from Singapore, Amber. First ICO from India, Wandex. First ICO from Finland, Soma. First ICO from Canada, Dub Tokens. So, did pretty much like 40 ICOs, raised $480 million. Before this, built an artificial intelligence company. So if you Google me, you'll see my AI company, which got featured by The Economist as one of the leading innovators in the world, got acquired. So in 2007, I built one of the first tablet devices in the world, which is called Sketchbox, which got acquired by a company called Fixstars. So now I run a company called Blockchain Monk. So I'm into this meditation, yoga, things like that. So the monk side of it, and then there's the blockchain side of it because of the history. And so we work with interesting companies like Red Dot Power, a couple other companies here in Singapore. We have clients in all 4 continents. So that's in brief my intro.
Thank you, Karthik. Really, from the early days. Yeah, definitely need more tech guys to zen out. I think Blockchain Monk would be useful. Yeah. My name's Anson. I'm the CEO, co-founder of CoinPip. We are venture-backed by 500 startups, as well as StartX, which is the Stanford-backed accelerator as well. So we do business payments for many different companies, and now more and more, obviously, for the crypto community, making business payments for their salaries, suppliers, vendors, and so on. Access, I'm the co-founder of the association, but now it's for the community, it's not mine. There's elections every 2 years now. It's my second re-election for this. We have over 290 members now, and collectively the corporate members have raised over $600 million in ICOs already. And hence working very closely with MAS and the banks on how to make sure we get the bank accounts for these companies sustainably and not just have them opened, but obviously more than that. But this is one of the main projects that we're working on right now.
Hi everyone, my name is Arvin. I guess I'm somewhat of the black sheep of the panel. I'm not directly involved in cryptocurrency or blockchain technology, but I do bring a somewhat different perspective on payments. Currently co-founder of Hula. It's an installment payment solution for online purchases at 0 interest. Available here in Singapore and just recently launched. Looking to grow that business now. Like I said, very traditional payments, just looking at helping merchants drive up their conversion rates and have more sales online. Prior to that, spent a couple years at Visa working with a few companies that are crypto related, trying to help them bring some of the cryptocurrency into the fiat world through issuing a card. So there's a bit of history there. And prior to that, spent some time at WorldPay doing online e-commerce acquiring, again, working with merchants to help them optimize their payment suite for their online transactions.
So you guys know me, right? And I want to mention the reason why I came to crypto blockchain and why I'm a strong believer right now. So basically, I have been doing startup since 2010, quite early, but doing very traditional ventures before, and then sold them later. So 2 ventures, and then the last one I was doing was the mobile games, because I was always thinking doing something more scalable, because traditional business is like a project by project, right? And when I was doing mobile games, we had a very good product, but the thing is we didn't have traffic at all. So you have to go buy traffic from Baidu, Tencent, or Alibaba in China. They're so expensive. The cost return, they don't match at all. So I decided to shut it down. That was the first time I really lost money in entrepreneurship. So I started to think. I was wondering why it happens this way. So, and then I realized the internet's entrepreneurship, it came to an end. It's a monopoly game. You got the traffic, you got everything. You can copy other people's product just 1 second, right? But when I look at the blockchain, really, it's something beyond their control. It's something both scalable and also you don't need to go with those big guys. So I really became the believer in blockchain. Hope it can really realize the decentralized dream that internet hasn't achieved yet, right? So that's how I came into this industry. Yeah.
Thank you. Really great to see a diverse background. So starting from really early days, Anson representing a community. Arvin with your background from Visa and now some traditional payments as well. Of course, Brady working on a public protocol. Now, to introduce or to start off, there is still actually quite a bit of skepticism about cryptocurrencies, and many of us are still trying to wrap our heads around it. And everyone has kind of a different definition. So can we hear from you, why do you think cryptocurrencies are better than fiat, and why do you think so?
Should I start? Or? So, I was part of the history, so I was doing my PhD at the University of Oslo, and the whole world was falling apart because the financial crisis happened in America, and nobody knew what was going to happen. Greece was in a financial crisis, American crisis spilled over to Europe. So, and all these government money, taxpayer money, was used to bail out these banks, and these banks are building all kinds of crazy financial instruments that nobody understood, like mortgage-backed swaps, credit default swaps, all kinds of crazy securities and swaps that nobody would even decipher. I mean, you and I, if we sit down and read the contract, we would not understand. And I have half a dozen degrees. I have a BA, MS, MBA, PhD, and I would still not understand those contracts. So what the blockchain created was this personal relationship between human beings and their money. Like how you would not let a third person come between your girlfriend or your wife. Why would you want a third person to come between, you and your money, right? So what the blockchain created was, first time in humanity, create a private relationship between human beings and their money, which is very powerful. I mean, like somebody was talking about, unbanked and stuff like that. I mean, there's really 3 billion people in the world who do not have bank accounts. And so finance has so many dimensions. It's politics, it's economics, history. So when we really see what is going on, we have the technology to thrive, but we live in a world of scarcity. So what cryptocurrencies is actually doing is, I call it the second French Revolution, which is to move power from institutions to the people, which is the network, the miners, or whatever. So I think that's why cryptocurrency is important, because, we cannot see the pain and suffering of all these people, right? I mean, we have to empower them, and that's why it was created, and that's what it's trying to do.
I echo similar points, but from a definitely try to do it more layman style for that, because we have seen too much power being stuck at the top and everything being centralized. And not only that, most of the large centralized entities are now abusing their power, right? But, so with the blockchain cryptocurrencies coming about, it actually turned the world upside down, okay? Even for ICOs, it really disrupted the way how VCs thought about funding and stuff. The VCs always thought that they were at the top of the food chain, they're the ones giving the money, right? But now ICOs is really making them think, going backwards and forwards, sometimes scared of ICOs, now want to be part of it, and now thinking of different ways to leverage on it. So, but the main point of leveraging a blockchain technology is the decentralized nature of it. However, in terms of the adoption, even for merchant payments, at least for the past 4 years when I'm in this game, in the merchant space before, is the volatility. That was the main thing that they could not really get on board into the blockchain space. But now, with the rise of stable coins, some doing well, some just starting off, some may disappear, we don't know. But with this new stablecoin industry coming up, things will change. We already hear normal everyday merchants that say, I want to take advantage of the crypto community, but somehow I don't want to touch the volatility. Okay? So stablecoins can now help bridge this gap. Okay, but definitely we still need to understand that stablecoin still has a backed bank account. Okay, so this is like, to me, it's like the first phase. How stablecoins will evolve later on, that is for us to see. I also don't know.
So specifically about cryptocurrency and the applications, I guess the sentiment is certainly shared in terms of how it impacts everyday value creation. So I think if there is a point where a merchant says, in order to unlock a specific customer segment, I'd like this to be available as a payment option on my storefront, I think that's the point where there's potential value. And if that translates into metrics where there's increased conversion, more spending, bigger basket sizes potentially for that merchant as well, I think those are some of the proof points that will be necessary to show that cryptocurrency has addressed a market need.
I think in many ways, definitely cryptos are better than fiat. For example, I graduated year of 07 with a master's degree in finance, so I was doing Wall Street job at that time as well when I graduated. And then the financial crisis came, and a bunch of central bankers, when they woke up, they're like, oh, we want to bail out, for example, GM. But the GM top executive, they rode a private jet to the conference room. And the Fed is using all the taxpayers' money to bail those super rich guys. Do you guys think it's fair? You have no choice, right? So now we got the crypto. We have definitely choice over the inflation side, right? And the other thing is, when we deal with the fiat, for example, when we do cross-border transactions, I know when Philippines, they transfer money, for example, from Hong Kong back to their hometown, sometimes take them 15 to 20% for the transaction fees. I was like, wow, that's insane. But what can you do with that? I was also talking with the Mecca Investment based in the Middle East. So the CEO of Mecca Investment, he told me the people from Sudan, when they transfer money, the money they earn in Dubai, for example, transfer back to their hometown, sometimes taken 50%, up to 50%. I'm like, oh, this is total rip-off. But this is the existing financial system, fiat system, right? I think crypto could do much better in these two ways, right? So inflation control and the cross-border transactions.
But to be fair, there are the super big exchanges also going on yachts and cruises and that. Okay, but the problem is when you have centralization, you have sucked in the most power, sometimes you start abusing it. So we need to uncentralize the centralization in our decentralized space as well.
Thank you. So we hear a common thread of saying the decentralization, of giving power back to the people, of not having to go through a central bank and such, having a personal relationship. I also hear kind of different use cases for cryptocurrency coming from all of you. So Kartik is talking about kind of peer-to-peer payments, where it's personal. Anson, you're talking about merchant and stable coins as well. And same thing with Arvin, was talking about merchant acceptance. And Brady's talking about kind of overseas movements or remittances. So can you share with us, what do you think are the most effective ways to use cryptocurrency? What kind of transactions or payments are where cryptocurrency is better? Is there any kind of transaction where fiat is still better than using cryptocurrency?
So, I mean, we are seeing a lot of use cases right now because we live in a very interesting time, right? You see Venezuela, there's hyperinflation, right? You look at Iran, there's hyperinflation. You look at Argentina, there's hyperinflation. The Turkish lira is losing money. The Indian rupee is on, free fall, almost like a free fall. So we are living in a time in which there is no stability. Governments no longer have the power to stabilize their own currency. So what we are seeing is we are seeing the first wave of crypto use cases for payments, for value storage, petrol from Venezuela, oil-backed cryptocurrency. What do you do? I mean, you get on a currency war with one of the most powerful countries in the world. You get crushed like a cockroach, right? So that's why, again, personal relationship between human beings and their money, creating openness, creating transparency, creating auditability, right? Creating something in which everybody can see. money that's actually backed by some real value, right? It's not like going to a temple where you believe in God and God exists. It's not like that, right? Money has to be backed by something real. So we are seeing a lot of those things that are coming out where the use case is, it's almost, life or death for some of these countries, right? Because some of these countries are sanctioned. You cannot trade with them in their currency. So we are seeing close to a dozen countries in the world right now adopting cryptocurrencies like Bitcoin and others as a national currency system. So there's a real use case for cryptos.
Sorry, what's the question again, Mr.?
So what are some of the most important use cases? And are there any use cases where fiat is still better, let's say? Or is it everything that's crypto better?
Fiat is better not because of the fiat element of it. It's because, at least in a centralized payment platform, it's much faster, right? If, for example, you made a payment using Bitcoin during December 2017, you're going to be waiting a very long time, paying very expensive fees. Okay, so this is one thing that in the decentralized space we need to solve. But in terms of user experience, if you use Alipay, WeChat Pay, this is very fast because everything is centralized. But to me, it doesn't have to happen this way because we're seeing new technologies coming out trying to increase the transaction per second and stuff, but we're getting there. In terms of remittance, definitely, excluding the December again, normally the cost of transferring cryptos is very cheap. Okay, if you send $1 million over, I send $10 over, the cost is basically around this, very similar, around the same. But obviously, once you do the transfer, it's great when Bitcoin is going up. Okay, when you do a transfer, the other side wait one day, then they earn some extra. But it doesn't feel good when it's the other way going down. Okay, so that's why there must be an element of not centralized stable coins to come out. Because, for example, CoinPip has been using cryptocurrencies in the middle to do transfers for 4.5 years already. And most of the time now, back then, was using the main cryptos. Now we have remittance partners around the world that use leverage on a private chain. So basically, the private chain we have, each token is actually equal to $1 US. So instead of using Bitcoin, we're actually using that, and things move faster that way. But obviously, it's only for the private partners. So our remittance works. Payments also work. Again, it's even for remittance partners, we also want the stability as well.
The place where I typically anchor is high-value cross-border transactions as well. I think it's a place where you can add value quickly. It's slow, it's clunky, it's expensive, and it's a place that's kind of the low-hanging fruit to make a difference. So definitely a place where I've seen real use cases, people, everyday folks using it. But it's not that people are going out and saying, I'm going to use or change the type of technology I'm using or interface that I'm using to do something. It's actually, I found a service provider that can do it cheaper and faster for what it is that I'm trying to achieve. So it's just, again, value creation. Consumers see it as something, or businesses as well, when it comes to those high value transactions cross-border.
So it's if we compare the crypto versus paper currency, I didn't see any advantage that paper currency have, right? It's printing costs money, then destroying some of the have destroyed the paper currency. It's not a huge cost. So basically, a paper currency costs 20 to 30% of its face value. So, but if we see digitalized cash later on, for example, Chinese PBOC central banks considering digitalized RMB, I guess very soon in future. I think probably in domestic transactions, fiat and cryptos, in some ways, they could comparable. But when we're talking about the cross borders, right, especially like people are unbanked, and then cryptos has like compelling advantage, of course. Yeah. So overall, I think cryptos have great advantages versus fiat.
So one last one, store value, we haven't really talked about that. So unless everyone thinks that US dollars will be there for a long time, then keep them. Otherwise, cryptos have their worth there. Okay, because if you look at all the, for example, Bitcoin itself, all the different benefits, is actually one extra benefit better than gold. Okay, it's also limited. For example, gold, you have to transfer the whole thing. You can't chip it off. For cryptos, you can cut into very small pieces, right, and then send it off. So store of value definitely is one big benefit.
All right, thank you. So we hear quite a few kind of applications. We hear high value cross-border transactions. We hear store of value. We also hear, say, as an alternate currency when your own country's currency has collapsed. So all of this allow you to kind of use cryptocurrency for transactions, payments. And what we understand is often volatility runs contrary to that. So is volatility acceptable in cryptocurrency? Should it be embraced? As a store of value or as a utility token, it seems to be celebrated. But at the same time, we see a lot of people going towards stable coins. So what are your views on volatility in cryptocurrency?
Oh, it depends on what you compare it with, right? So if you compare a Bitcoin with the US dollar, maybe US dollar is volatile. You know? So see, I mean, but jokes apart, I think volatility is the nature of the beast. Right, because it's not controlled by anybody, right? When you put it out in the network, it's pure supply and demand. It's pure market, right? So there are the first iteration, right? So like if you look at modern banking, it took 500 years to evolve from double book accounting to today. When I read the white paper in 2008, it's only 10 years. This is October 31. Officially, it's 10 years. In the crypto world, so I feel like a very old man. So, but anyway, I mean, coming back to the point, so it depends on what you compare it with, right? So you're looking at Lightning networks, you're looking at off-chain solutions, which will actually make transactions much faster. You're looking at governments that are adopting officially cryptocurrency. So then you won't really care whether it's volatile or not, because that currency becomes the pivot currency, you know, vis-a-vis the dollar. But, you know, of course, there are a lot of stable coins. I'm part of one of the, interesting experiments from Europe, which is called FX token, which is backed by government bonds, right? So if the banks go down under, you have Tether. If the banks that hold Tether goes down and drags everything along with it. So you're seeing first experiments of stable currencies that are actually backed by government bonds, AAA rated European government bonds. So FX token is one such project which I'm backing, which I'm sort of in the board of. So we are seeing a lot of experiments like that where people are looking at ways to stabilize, cryptos so that they can be used for cross-border payments. But it's the double-edged sword, right? The yin and the yang. You need both of it. You need the light and the darkness. And so, there's no easy solution, to some of these problems. I mean, there's MakerDAO. I mean, there's Bancor. I mean, there's so many other mechanisms to stabilize, create liquidity, but volatility will still be there.
I actually think it should be embraced. But you can already see for the 10 years of Bitcoin's volatility, it is coming down. If you compare to the other cryptos, it hasn't really gone down as much as all the other ones. The thing is, if you don't embrace it, that means someone is actually controlling that value, right? So we just don't feel it, but US dollars has lost over 95% for past, since 1971. But we don't feel it because things go up in price and all that. But what you're holding as a fiat currency, it does go down, okay? Because government's income is actually inflation, right? So yeah, I'm always in a very, very gray line because I'm working with government, yet I'm also on this side to understand everything. I do see that for the stable coins, yes, definitely experimental stage. Don't take for granted to hold onto US Tether, for example. If you want to hold on something long term, if you have a five-year sort of horizon at least, definitely the normal market rate Bitcoin, coins like Bitcoin, Ethereum, and all that. Yeah.
Well said.
Yeah, so I would view stablecoin as a very good still bridge as far as now, right? But if the cryptos reach a critical mass or the network effect, And then I guess we don't need to talk about this because everybody's accepting crypto maybe as their base cash system. And then they're thinking the other way around, oh, then USD is probably too volatile to hold, right? If you can use cryptos in every scenario of your life, real life. Yeah, for example, for us, we don't care about the volatility that much because every vendor we work with, we pay in BTCs, right? So why do we care about how USD fluctuation compared to BTCs, right? But unfortunately, the general mass doesn't have reached that point yet, right? So it takes time. Yeah, but I believe in future, we probably talking the other way around.
I see. So I hear a lot of optimism that actually Bitcoin and cryptocurrencies will become the majority of payments, maybe even such that even USD will be denominated by Bitcoin, and then you can start using cryptocurrency for a lot of payments. But in the meantime, perhaps stablecoin is the kind of yin and yang that you kind of use as we go through this transitory phase, as many of us see it. So once we start using cryptocurrencies for payments, we now have seen an explosion of thousands of utility tokens which are used for payments. So when we get to that stage, then we might need to very quickly change, or I use one cryptocurrency for this service, another for the other service, another for another different service. How do you see this explosion of cryptocurrencies play out? Is it realistic? Clearly there will be a few major players like Bitcoin, Ethereum. What's going to happen to everyone else?
So, the foundation, so when I got into the crypto world, there's only Bitcoin, and then we had all these other currencies. There are two fundamental laws that guarantee the success of currencies. So, we have about 3,000 cryptocurrencies right now, right? But Bitcoin's still number one because of Metcalfe's law and log linear power law, right? These are two fundamental laws that govern the adoption of cryptos, right? So store of value, exchange value, and representation of value, all three criteria has to be satisfied. But having said that, I think it's I think we're at a very interesting crossroad where we're also seeing a lot of just like open source. Open source. I work for 3 of the largest open source companies: Red Hat, SUSE, and Sun. But there are 300 distributions, open source distributions. Each came with their own innovation, and that innovation was then taken over and committed to the larger distributions. So what happens is when you have 1,000 experiments, some of the best things get picked up and become part of the mainstream. And then network effects kick in, like Metcalfe's law, log linear power law, and then so we live in a time of exponential financial innovation, and we need these hundreds of cryptocurrencies to start innovating, to start solving very specific problems, so they can all be coupled together, which is coming right now. Reverse mergers, reverse acquisitions, ICOs that are failing are coming together, to swap tokens. So we will see a lot of that stuff happen, because every 3 days I'm in a new country and speaking at events like this, and this has already started. It's already started.
Yeah, because of its decentralized nature of this whole ecosystem, it is meant to be that way. Right, so for example, Linux also went through the same phase. Many different people tried to do different distributions, and at the end, only a few actually won. So Red Hat was the one that is staying alive, still being the biggest, having the right business model to stay there. And there's still a lot of Linuxes around that are dead, but if you want to use it, you can still use it. So the analogy is very similar. Same for the Linuxes, some of them actually combine, so consolidation will happen. Here in the crypto space, if we translate that, we have seen that happening. Different coins created on different platforms, you can then do swaps, or if two coins that want to merge, they create another one to make sure they can do a swap there. So it is happening. So the more they are, the better. That should be the KPI for the whole ecosystem, but doesn't mean that every one of them would be used. But the more of them means that the more innovation is coming up.
It's a really good point, I think, in terms of people attempting or taking a stab at building something that can scale. I mean, it's not specific to cryptocurrency either. When there's new innovation or a new business model that gets established, there's going to be multiple players that try to step into that space and establish themselves as the #1 choice. but it just creates a ton of competition, which is quite natural. A few players emerge as leaders, consolidation happens, a few bigger players grow out of that, there's good competition, and a few can survive and provide alternatives. Hopefully that there are alternatives that get provided. So I don't think it's dissimilar from other business innovation that's happened in the past, and it can follow that path. I think just one of the comments around having too many, though, is confusion to the mass public or to the mass market. I think there is a point where there's so much happening, there's so much in the news, there's an overload of advertisements to me as a general consumer that it does confuse, I think, the mass public. So sooner rather than later, hopefully there is some more consolidation that happens. There are some clear winners that come out of it, and it can be a lot clearer for consumer adoption as well.
I don't think there's going to be confusion in future, even if we're going to have maybe 10,000. Yeah, maybe right now, think about this, like how many stocks in the world, worldwide, right? Even for example, in the US stock exchange, there could be more than 10,000 already. But do people get confused? I guess not really. People will dive into their information and invest in the one they think they will grow, right? I think the same happened to cryptos, right? It's good to have so many cryptos compete in the market, and you can choose the ones you think that is has a bright future, right? Yeah. So, and another example, if you use it as for example, as a product, think about how many milk brands in the worldwide, right? So many. You can choose just one of them in each country. So pretty good. But why do we only use one fiat or one currency in one country? It doesn't happen too long, actually. In the past, there's so many tools or physical goods used as currencies. It doesn't have to be the paper money, the fiat, right? So it comes to the age, as economist Hegg wrote in the book, the denationalization of currencies. Then we're going to see the free market competition, which I think is very good. Yeah.
I see, great. So we see a lot of agreement that this explosion of cryptocurrencies is indicative of innovation and is creating great competition, and so that we can pick some of the winners. At the same time, perhaps we also need to balance, the potential confusion that many of the mass audience might face as they look at all these cryptocurrencies. Picking up on one comment that Brady you made, comparing it to stocks, for example, that there are so many stocks in the world. Now, there seems to be a kind of a conflation now between cryptocurrencies, and they function somewhat as pseudo-securities as you invest in them. And in fact, probably many of us here buy cryptocurrencies mainly to hold and to invest. So what do you think about this balance between speculation and adoption, given today we're talking about bringing blockchain to life and actually using these cryptocurrencies? Should speculation be reduced? Is it healthy? Is it sustainable?
I'm doing the first STO in Singapore, by the way. Jules Corporation, and this first energy-backed security token, Red Dot Power, who's here. So, we're seeing the second wave of security tokens that are coming. And the interesting thing about STO is the liquidity, right? I mean, you look at traditional companies, you do VC money or PE money. It takes 7 years for these companies for the investors to get liquidity, unless somebody buys them or they do an IPO. And it's very expensive to do an IPO. 95% of the startup companies fail because they're not able to raise capital, right? You have a lot of angel investors, but you look at Series A, Series B, and Series C, there are very few funds. Series A maybe 10, Series B 2, 3, Series C almost none, right? But what we are seeing right now is when you securitize the shares of a company, the investor has instant liquidity. So he has a choice to either speculate or hold, depending on how the investors behave. I mean, how the founders behave. If the founders are actually building the underlying asset, they will hold on to the tokens because there's more confidence in the tokens. If the founders are going to buy a Lambo and then take vacations in nice island nations, of course they're going to dump the token and get out. So speculation is actually quite important, I would say, in some of these things, because it actually is a market sentiment. So market is the power of God, invisible hand of God, I would say, because the market knows better, right? They know what is going on. And so I'm a free market guy, Austrian economist, so I believe in the foundational forces of the market. and it's actually a good thing.
What about for utility tokens where they're actually designed for payments? What about speculation of those?
So, the security tokens is a different beast because you're securitizing your share, your assets of the company, so on and so forth. Utility tokens are a utility within the system, right? So speculating that is very dangerous. So that's why, when I started initially doing my ICOs, we didn't think about these things in 2015, 16. And then we have seen a pattern of the speculation, right? So massive speculation. And what we have realized is that it is very dangerous to do a free floating utility token. So what we are seeing is a hybrid token model. So I'm building the first hybrid token model from Singapore, where you have a security token which securitizes the shares of the company, and people get dividends on the company, and they have voting rights, liquidation rights, so on and so forth. But the actual utility is a stable coin, which is either backed by Singapore government bonds or an FX token from Austria, which is backed by European government bonds. So then there is real utility, because if today the price of this thing is like $5 and tomorrow it's $3, and also, the second thing is most of these founders are 24, 25 years old. These guys, when you create your token, you're printing your own money, right? So you have to manage inflation, you have to manage, monetary policy, fiscal policy. A lot of them are not economists. And they pay money to very expensive market makers, right? So in this market, if you look at the utility token, the guys who are making the money are the market makers, right? Is Sim still around? Lim is still around? No, he's left. So he's making a lot of money. So that's the problem. So this is the model I would recommend, looking at what's happening right now. So
you seem to think that the utility token model is past.
Well, the utility token model has not really passed, but it requires greater understanding of how to do price stabilization. And to do price stabilization, you have to design your treasury function, you have to design a monetary policy, you have to have automated bots to do this 24/7, because you never know who's doing the pump and dump, right? It can start anywhere, anytime. So we do not still have the financial instruments and the software which can commoditize price stabilization of utility tokens. So once those things get built, then we can do price targeting, we can do gradual appreciation of the asset, things like that. If not, it's, we have seen 80% of the ICOs in Singapore are trading below the ICO price. If you go to coinmarketcap.com and then look at some of the ICOs from Singapore and look at the offer price and look at the current price right now. So it's a very interesting question, and I will have a more definitive answer in a couple of years.
Same. I'm still neutral on STOs, or even on the question whether utility is a pass. But definitely one thing is speculation utility tokens is super dangerous. If you think about the stocks, why there is speculation, because there is valuation attached to it. Okay, once you list the ICO, you list the utility token, where's the value? Okay, there's no cash flow because it's utility. You don't own the stock. It really depends fully on sentiment, right? But since it's human nature that likes to speculate, it is much more suited for security tokens if we are talking about speculation. So definitely it is, if at least when seeing the community, it is a need to have security tokens up. But in terms of the laws, it's actually very, very challenging. For example, if Singapore allows, let's say, for example, Singapore does the legislation changes a bit to be more favorable for security tokens, and then you can start selling STOs here, for example. But if you start selling in another country actively, you'll be infringing the law already, all right? Unless you're saying that you can do marketing just from Singapore, and then passively they come to you, then that's fine. But the point is, once you have to do roadshows to talk about it, and then once you do a security token, you better talk to the regulator there, because you're really infringing on the laws. So my point when I talk to MES is, if you really want to make this work, we need to work with other central banks together. Because if you just have Singapore alone, you're not going to get the liquidity, because once you infringe someone else's country on the laws, and you only have Singapore, you only have that bucket of people to buy you. Yeah. So in terms of laws for security tokens to expand is still quite challenging.
Right. So security tokens come with the advantage of allowing speculation, but with the limitation of like jurisdiction and regulation.
So allow rational speculation, okay? Because utilities are totally irrational. Okay, the only buy and sell factor is how much people are buying. If you're contrarian, you know everyone's buying, then you don't buy. All right, and if everyone is selling, then you buy. That's like the only factor you can see, right? But there's no value. It's very hard to value utility tokens.
Sounds pretty accurate to me. I mean, the only thing I'd say is that there's, especially in places where things are unregulated, utility token specifically, in scenarios like this where information flow also isn't necessarily regulated, there are disadvantages and advantages that can come from access to information as well. So I think there is adding more danger to that area of speculation is the fact that there is imperfect flow of information as well that isn't necessarily regulated. So it makes it even more complicated.
So I think at the early stage, some mild speculation is definitely necessary, and also it's the truth, you know. It happened before, right? So when we can see the BTC price, ETH price, and EOS price, they all went crazy for some period of time. But as the supply of the cryptos increased so much because of those ICOs, right? And lots of them, of course, they're spins, right? And when the market comes down to bear market right now, I think a lot of scams have just vanished, right? And then people will come to think, so do I do the same speculation as I did before, or do I become more rational in my next investment? So I think that right now the blockchain producers much more professional, I would say, than before. Yeah, they really regard this as a venture, as a new entrepreneurship, rather than just a way of get quick, easy money. And the market doesn't allow us to do so, right? It's hard to raise money, even if you offer a great platform, right? Because it's bear market. And after this, I think people will definitely gradually become more and more rational about it. Then make the market quite healthy, much healthy than in the past. Yeah, that's what I think.
Thank you, Brady. So I'm looking at the time we have left. I think we can take a couple of questions from the audience. Is there anyone who wants to ask anything about cryptocurrencies and adoption? Yes.
So maybe a question to Karthik. You talked about the hybrid model that you're sort of exploring. But in Asia, from what I understand, if you go the security token route and you try, and projects which are pre-revenue try to raise capital, it'll go down the traditional valuation route. You're just basically creating a digital twin of the security and adding the liquidity. But the people who are going to be investing are the traditional VCs who kind of shy away from pre-revenue kind of situations. So how will that really work in this context? So that was the first question. And the second bit that I was also sort of confused, you sort of give a lot of, or derive a lot of comfort from FX-backed, the FX bond or whatever, the Eurobond-backed token or the Singapore government bond-backed token. But effectively, isn't this all linking back to fiat? Because a FX bond is the creditworthiness of the government, which is derived from its taxation ability, which all links back to fiat. So how would that really solve the problem?
So first question is this hybrid token, right? So the security tokens you cannot publicly solicit, because you cannot publicly solicit securities, and even if you do a private sale, I mean, you can only do a private sale. And when you do a private sale in specific countries, you have to comply with the laws of those countries. Like in US, if you go to accredited investors, you have to do Reg C, Reg D, Reg A+, whatever. In Singapore, there are things like safe harbor exceptions that you can do, but there are only 50+ people that you can. So there's a lot of rules, which is why not many people have done it, because it's fairly complicated from a legal perspective. And also, creating non-fungible token standards using ERC 721 or 888 or whatever. There are not many guys who have actually built on non-fungible tokens. And so when I did one of the first ICOs in Singapore in late 2016, early 2017, Amber, I mean, it was the same case. Nobody knew what utility tokens were, and it was very new thing. So eventually it'll go to your second question. So this is an intermediate phase, right? Because the option of a free-floating utility token is daily treasury management. You have to have a large treasury to stabilize your token, right? So what happens when the price goes down? You have to go and stabilize. You have to buy the tokens back. So when you raise a significant amount of money, a large chunk of that money will go to your treasury function. So either you pay your market makers or you sit down and try and do this, and when you pay the market makers, they make all the money, you'll be left with nothing. So it's a fairly complex problem for which the easy solution right now is a government-backed stable coin, right? I mean, government bond-backed, because other stable coins, nobody knows whether they actually have the US dollar. And the bank is in some Costa Rica or something, and the government goes down and they take the banks down with them, and Tether goes down, or True USD or whatever the coin that is, which is backed by a stable currency, might just go down. So FXTO is the currency, fxtoken.com, so it's the first treasury government bond-backed stable coin, which a lot of people are now looking at, and it's a gateway to fiat. So there are no easy solutions to this, So there is price targeting. There are tons of, econometric solutions. There are PhD research on price stabilization. So people are slowly reading all those things, trying to understand what this is. There are new game theory models that are being applied for this. It's fairly scientific stuff. There's no easy fix to this problem, because it's human nature. It's market management, financial engineering, a lot of different components coming together. So it's a fairly advanced science in itself to do this. But we will see a lot of tools that are coming out in the next couple of years. I'm already seeing a few of these in the US and Israel, which are actually built to do this. Price to Bancor, for example, right? Liquidity, 0x, a couple of other protocols that are built to do price stabilization. But there is no easy solution for this. You have to live with the, you cannot have the cake and eat it as well. So,
any other questions from the floor? Okay, so maybe I'll jump in with one from myself. How do you see the adoption of cryptocurrency in kind of vis-a-vis traditional payments, let's say with digital wallets, let's say with your background from Visa, like Arvin, I'm curious to find out, like e-wallets, digital payments, are they a barrier to adoption? So I understand in like some of the alternate currencies, like Venezuela, for example, they kind of have no choice. But in the developed countries, like Singapore, for example, credit cards are so easy to use, and like there are tons of e-wallets. Is there kind of a barrier to cryptocurrency adoption? How do we deal with that?
I guess the first comment is there's a massive barrier to e-wallet adoption, right? There's payments is easy in Singapore. We don't need another wallet. It's more or less solved for when it comes to traditional payments. I think the question mark is more about what are the consumer pain points that still exist when it comes to payments in Singapore or developed markets, and how can broadly any technology provider or solution provider come in and help solve those problems. It doesn't necessarily matter to a consumer what you're using in the back to solve it. Honestly, when we speak to either consumers or to our merchants, we don't talk about the technology that we use, other than we do some sort of risk analysis on a behavior and contextual basis on every transaction, and merchants are usually like, that sounds good, you take the risk? Yeah, okay. I don't care, you take the risk. Whatever it is, you're taking the risk. So that's typically the conversation, right? So, and when it comes to consumers, it's even more obvious language. It's, okay, you have a problem of affordability. We're gonna allow you to pay for something over time with no added cost. Okay, that increases my affordability, increases my buying power, that's helpful. So I think when it comes to this market and other developed markets, you have to bring use cases that are actually solving a pain point, either one that's being communicated by consumers or that is in existence but they don't necessarily talk about on a regular basis. That's why I also, I guess, anchor back at cross-border transactions, because as a business owner, I have service providers in other countries, and it's a problem I deal with on a regular basis. There are some good companies trying to solve this. I've never used a bank for cross-border transactions so far. I've used multiple fintech service providers, whether it's a TransferWise or Instarem, and actually I've never asked them what type of technology they use either. I just know that they're faster and cheaper than me going to my banking service provider today. Even though I do have a relationship with my bank today, it's not one that I can leverage for solving that pain point. So I think for both businesses and consumers, it's just about solve a pain point that exists. Wallets don't do that in a lot of markets. Yeah.
Yeah, so I totally agree with that point. Consumers don't actually care what you have behind, as long as it's simple to use for them and it's fast, right? But on the other hand, if you look at the SG QR code that we have today, there's one market that they're not solving right now in Singapore, and that's the hawker centers. You go to hawker centers today, they still want cash. Okay, the main reason is they can't just wait for the person to turn on their phone, scan the code, enter the number in. You already lost 5 customers lining up for your chicken rice, right? So it's about understanding the behavior. In Singapore, definitely, if you compare cryptos or whatever we have today, definitely what we have today is much better because of the stability. But if you go to like Philippines today, or even Indonesia, when they're already used to volatility, then it may be something that you can also offer to them. But again, it also boils down to the user behavior if you understand them. So whatever Nets is doing, I'm still quite laughing because there's one market that they can never solve, which is the hawker centers. Yeah.
So when I joined the Global Payment Summit in KL, Malaysia, a couple of weeks ago, I asked all the e-payment solution provider there, what if do you want to integrate our crypto solution? They said, of course, if we got the license. So let's suppose if they have the license and then we offer them the crypto payments integrate into their existing wallet, that could reduce their cost by, for example, using our system, we're talking by 99.9%. Do you think they're going to use it? Yes, of course. And then they use maybe another 20% to subsidize their customers to use it easily, very easily. Like he mentioned, oh, the guys, they want to do more business. For example, that's why they accept cash. But what if I give them more cash? They could relax, right? Easily, because maybe in Singapore you guys didn't see it, but in China, in mainland China, you see so many internet giants when they're battling, they're doing so many subsidies. It's so easy for them to gain market. For example, you see Mobike and OVO, just in like a couple of months, it's all over in China. You got more than 1 billion bicycles, new bicycles all over China, right? It's happened like overnight. Yeah. It's easy, right? But the problem now is that they don't have a license. They are reluctant to do it because they feel the government will put sanctions on them.
They will. And it is a part of it, I agree, and there's a barrier there. But the fact is, if you could subsidize all of Singapore and you threw in as many bicycles as you can, and you've seen it happen, there's no market that's big enough here to actually prop that up, right? You're not going to make the returns here. It doesn't exist. So you need to build something scalable in other markets. I think Anson's point is, you go to somewhere where volatility exists. In China, there was no domestic Visa and MasterCard competition, right? When these companies came into existence, there was a huge gap in the market when it came to consumer payments. I think that created an opportunity as well. So.
In Singapore, I would say we should be more targeting, as I mentioned, more like cross-border transactions. Yeah, there's so many Chinese tourists going to Singapore. Like for example, in national holiday today, right now it's the national holiday in China. Oh, sorry, I'm still working. But like so many tourists come over here. It's actually so convenient for them to use the Alipay, WeChat Pay when I take a taxi. But when you use the crypto, the same. It's much more easier. Rather than the taxi itself, you can use everywhere. So convenient, right? And Singapore is so well known for tourist place, right? That's the frame that we can take a look, right?
So who knew Superman was an Indian guy and he was pro-crypto?
Sorry.
But on a serious note, so when you actually look at historically what has happened, right? The guys who made the most money, most of the money is made in the boundary of law, right? What do I mean by that? On this side of the law, it's fully illegal. So if you do something, you go to jail. On that side of the law, it's fully legal, what does it mean? It means the big guys will come and crush you like a cockroach, right? So all money is made in the boundary of the law when it's sort of not fully, regulated, whatever. So cryptos are still today like that, right? It's the Schrodinger's cat. The cat is both dead and alive. It's both legal and illegal, and it'll be like that for a couple of more years, which is where the opportunity is for companies to do innovation, to come up with these interesting models and all that. And like what you're doing, and so that's something that we have to keep in mind, that we live in very interesting times.
Yeah, indeed. Sure, of course. For example, the Uber case, I think you mentioned very good. Uber case, is it 100% legal? Not so many people think so, right? So many cities banned Uber. Hey, in China, you can still use Uber, but not in so many other cities. Like in Tokyo, you couldn't use Uber at all.
I thought they shanzaied it to call it Didi Chuxing or something, no?
They still own a big chunk of Didi. Okay.
I totally agree with your point, right? And for example, the internet giant Alibaba, you think the buyers and sellers are all paying tax there? Probably not. Are they legal or are they illegal? Right? It's hard to define. Yeah, like you mentioned, if you do 100% legal thing, oh man, congrats, you are getting $7 per hour for sure. That's it. Right? Yeah.
Yeah, so I think one of the times I think Bill Gates once said, if you get into cryptos, you do a few things, you can become a millionaire. Okay, that's what he said. But in fact, what he actually means is because crypto, I actually agree, but I think it's understated. Because of the decentralized and open source nature, I think we'll be in the grave for a long time. It's because once we reach to that stage, there will be another new innovation that comes up, and then regulators have to catch up. Okay, and so even when I talk to regulators now, especially when we have a big meeting every 6 months, they feel stressed because it's changed from 6 months ago when we spoke to them. Okay, so especially when they kept asking us to do an AML framework. This was even back in 2014. I said we were lucky we did not do the framework back then because the ICOs weren't in. Okay, if the ICOs weren't, if we had done the framework and the ICOs were done now, Singapore wouldn't be able to capture the ICO market, right? Because it moves too fast. So but regulators are now learning fast, but I still think we have many years to be in the gray. Yeah.
Right. So it sounds like we'll still be skirting the gray area for the time being, but of course, as long as there's value, and then as long as there's innovation, this is where the exciting bit is, like the exciting industry is. Now, just to wrap up very quickly, when was the last time you used cryptocurrency from? Because today, right, you can on Expedia you can book like hotels with Bitcoin. You can go to Shopify and like do e-commerce with Bitcoin. PwC accepts Bitcoin. Like so many merchants are not accepting. Just want to hear from all of you very quickly. When was the last time you used cryptocurrency?
A couple hours ago.
What was it for?
I was paying one of my employees. Paid him in Ethereum, and he was very happy. And so, but he's still praying that Ethereum doesn't go to zero.
Well, same. My business uses it every day. But for myself, just last night buying the US iTunes card. And so they take Bitcoin and then they'll give me the credits for the account.
Yeah, currency credit card. Probably have to come back to that one. I can't remember the last time I used it. Gotta keep holding, right? You never know. I'm still speculating.
Yeah, basically for business use, we do it every day. Yeah, it's every day. But like for personal use, that's really hard though. Yeah, but hopefully with our stablecoin partners, I can use that in Malaysia soon. That really solves a lot of problems for tourists like myself. So yeah, hopefully I can use it. Yeah.
Thank you. So on that note, thank you very much. Please give our panelists a big hand. Thank you, Karthik, Anson, Arvin, Brady, for joining us. It's been a great pleasure, and thank you everyone for joining us as well. Hope you had a great learning experience from bringing blockchain to life. We hold these educational events regularly. Please follow us on Facebook, LinkedIn, on Meetup as well, these events. Thank you. See you next time.